Hi, this is my assignment 3. So first question is the history of banking. So banking has evolved from simple grain loans to global digital networks. So first is that it began in ancient Mesopotamia and Greece, where temples were used as a safe repositories for grains and precious metals. So the first idea of banking is that a place where you can store or put something valuable and then just use it later. So that's the main idea of banking in the time. So during the Middle Ages, Italian merchants revolutionized banking by introducing bills of exchange and double entry bookkeeping. So what happened is that if I am the bank, you will put something valuable to me. I'll make a bill and then pass it to you so that you can show that to me once you needed it. So that's the we started to know banking in today's term. So modern era is that the establishment of central banks. So it stabilized national currencies and led to complex systems like we use today. So second question is the BSP functions. So the BSP is the Central Bank of the Philippines. Its primary mandate is just to maintain price stability, but it has three functions. First is liquidity management. It says that the controls the money supply to keep inflation low. So it controls how many and how much money that will be printed, because if it exceed, then we will have a so-called inflation where money is much abundant than the goods that you will have to pay for it. And then second is currency issue. So the Bangko Sentral of ng Pilipinas o BSP has the authority to issue our banknotes or bill notes that we use, like our paper money to use. Third is the lender of last resort. They provide loans to banks facing financial distress to prevent systematic collapse. And there's fourth BSP functions. And the fourth one is supervision. It regulates and monitors the operation of all banks in the country. So basically, all the banks, local banks, of will be they need to be regulated and be monitored by the BSP to have a fair operations. So third question is bank classifications. So there are three in the Philippines. Four again. I'm sorry. There are four again. So universal banks, commercial banks, thrift banks, and rural and cooperative banks. So first, universal banks, large banks with the widest range of services, including investment banking. Two is commercial banks. It's focused on commercial loans and checking accounts. Third is thrift banks. This is savings and mortgage banks. They primarily serve small to medium enterprises and housing. And fourth is rural and cooperative banks, focus on providing credit to farmers and rural communities. So the fourth one is different types of bank accounts. So there are four again: savings, checkings, time deposit, and ATM account. So savings account, most of us has this. Um, it's when you open a bank. You open an account to a bank. Normally, you will choose savings account, and then it's used for storing money. And then from what I encountered with this, many banks have their maintain balance policy. So basically, if this for example, they set 1,000, just to put it in a perspective. So if you put 100,000 in your bank, in your savings, you can get it as long as you leave 1,000 on that account. Second is checking account or current account. So this is designed for frequent transactions. It uses checks or debit cards. So these are the accounts that uses your frequent transactions from day to day. And then the third one is time deposit. So I've experienced this one, and through this one bank. So you deposit something for a year, and then it has higher interest rates. So this is good. However, if you need something, then you cannot withdraw it because you set it at a certain time frame. But it's good because it has higher interest rates compared to regular saving. So the fourth one is ATM account, or a basic account primarily accessed through automated teller machines. So these ATM accounts are used only for the withdraw money physically. And then the fifth question is services offered by banks. So the bank act as a financial intermediaries by offering lending, payment services, investment services, and safe deposit boxes. So these are the four offers service offered by banks. So lending, it provide personal loans to someone and to businesses. Payment services, if you do wire transfers, if you pay something in a restaurant, you can use your bank to pay it using your card or anything, or your account in the phone digital. And then third is investment services. So you can use bank, the bank can offer you the opportunity to invest. So if they have a you put a money, and then they will pay you for your money that's been storing there. Fourth is safe deposit boxes, so secure storage for physical valuables. So yeah, if you have jewelries, like expensive jewelries, even car, you can use banks for safe deposits. So sixth question is banks organizational structure. So a typical bank follows a hierarchical structure to ensure accountability and risk management. So there are four. Board of directors, they oversees the general direction and policy. So whatever their policy is, it is overseen by the board of directors. They agreed to it to be like that. And then second is the president or the CEO. They manage the day-to-day operations on all many branches they have nationwide or wherever it is. And then third are the functional departments. So of course there are operations, there are lending, there are treasurers, there are compliance, and there are IPs maybe, and there are security. So they have their all department. And then fourth is the branch level. So in that branch level, there are managers, there are tellers, there are loan officers who interact directly with the customers on a day-to-day basis. So yeah, that is my assignment 3.